Hello and welcome to Ticker Tapes. Today, we're back in the world of ETFs. Energy-related ETFs continue to hog the limelight, though this week it's not natural gas that's grabbing the headlines, although natural gas ETFs were among the best performers over the last 5 trading days. However, it was carbon, or more specifically ETFs tied to carbon emissions, that were the real movers, though in this instance, these moves were to the downside. GRN, the iPath Series B Carbon ETN, traded down by 12.18% over the last week, whilst KEUA, the Crane Shares European Carbon Allowance ETF, gave up just over 10%. The reason for that sell-off was not some change in global growth forecasts or other recessionary fears, but a proposal by the European Union to sell approximately $20 billion of additional carbon emission permits by 2026 to help fund other initiatives. Markets are a balancing act between supply and demand, and in carbon emissions, that balance now looks to have been skewed in favor of extra supply. Brazilian equities look to be back in favor, with EWZ, the iShares MSCI Brazil ETF, adding 4.89% last week, a week that included 3 consecutive days of gains and 4 new price highs. Monday's session was the most active, with more than 40.7 million shares in the ETF changing hands. Brazil's Bovespa index peaked in early April and then fell back by an eye-watering 9%, but it now looks to be staging a determined fight back. Investors continue to look for safe havens for their money as inflation remains elevated and $1.9 billion flowed into HDV, the iShares Core High Dividend ETF, which tracks a basket of 75 high-yielding U.S. equities that have been screened for earnings potential and dividend sustainability. The fund's top 10 holdings are as follows. That's not to say that ordinary broad-based equity ETFs weren't in favor last week, because they were. In fact, more than $7 billion was invested in funds that track the S&P 500 index. $5.33 billion went into IVV, the iShares Core S&P 500 ETF, and another $1.84 billion flowed into SPY, the largest index tracking ETF. In terms of outflows, $1.8 billion left IWM, the iShares Russell 2000 ET, whilst $1.5 billion came out of IJR, the iShares Core Small Cap ETF, and just over $1 billion was raised through redemptions in XLF, the S&P 500 Financial Sector ETF. We also saw just over $1 billion leave VLUE, which tracks value stocks, despite the ETF comfortably outperforming the broader S&P 500 over the year to date. Year to date, $4.6 billion has left the fund, which seems counterintuitive as value stocks are seen as having defensive qualities in a high interest rate, high inflation economy such as we have now. In its weekly Flow Show report, Bank of America highlighted that its retail clients were buying into the consumer, discretionary, and tech sectors, both of which have been hard hit in 2022. These two sectors saw the biggest inflows from the bank's retail clients for the second week in succession. Perhaps they know something we don't.